Good to see you.
Yeah, and so you invested into many unicorns and different tech companies. So can you tell us about your background and how did you start this venture investing? I know you started first as angel, so how did you get into it?
I like to joke that I'm a washed-up entrepreneur. I spent my earlier career as a startup founder. So after college, started one of the very early ad tech companies in 2005, and then we sold that in 2015. So a 10-year journey. And my joke is that I'm a washed-up entrepreneur, and that like I used to be, and now I washed up on the beach that is being a VC. This is a much easier job than being a startup founder, and I've been a VC now for 9 years. Yeah, been quite a journey. Yeah.
What was the valuation of your tech startup when you sold it, and at what price did you sell it?
Yeah, so we were one of the very early competitors to Trade Desk, which is now a $30 billion business. Unfortunately, we did not become a $30 billion business. They managed to succeed, and we ended up making the mistake of partnering with Facebook, which my recommendation to entrepreneurs is be very careful when you partner with big platform companies like Facebook because they decided that they wanted our business for themselves, and we didn't end up in a good outcome. We sold it at a we didn't do that well.
So did you make the exit to Facebook?
No. LinkedIn bought part of it, and then another part of it was bought by another guy. So complicated end transaction.
Yeah, so you ran your company for 10 years, so why did you decide to shift to venture investing and to help in other startups?
Yeah, so when we sold the company, I didn't have a role going forward. I was done. 10 years was enough for me. And one of the companies I had been advising was a company called Branch Metrics. They do mobile deep linking, and they were raising their Series A. And I was like, hey, there's this new AngelList platform. Can I try it out and run a syndicate, which is where you put up a deal and other people can invest in the deal. And they were like, sure, go for it, knock yourself out. So I wrote up a memo and posted it up there, and 24 hours later, I had raised $200,000.
Wow.
And I was like, well, look at me, I'm an investor now. I mean, I didn't know what I was doing, but I was kind of transitioning and figuring out what to do with my life. And I fell in love with the job. It's such an interesting job. It's you every day you talk to smart people, you learn about new things. You're constantly exploring the world, which I enjoy. And then I got really lucky. The next company that I invested in was Cruise, the self-driving car company. A year later, GM bought them for $1 billion, and so suddenly everyone thought I knew what I was doing, which I did not. But I got very lucky, and so the last 9 years has been just a whirlwind of investments and learning and just being very lucky, and it's just been quite a journey.
So is it a much matter of luck to you or not really?
Um, I think the true answer to that question is yes, yes, and yes. So it's a lot of this business. The outcomes are driven by the biggest companies. So if you invested in Uber at the earliest stages, or Airbnb, or Google, or whatnot, that's where all the money gets made. And any company at the beginning, at the seed stage where I invest, there's so many risky gates that they have to get through between there and being worth $1 billion or 10 billion or 100 billion or $1 trillion. And every one of those risky gates, you are rolling the dice, and sometimes the dice don't come your way, and sometimes these companies fail. And so in order to get to the biggest outcomes, you not only need to pick smart founders who are doing important things in big markets, but they also need to be lucky. They need to make the right decisions at the right times, and then they need the world to go in their direction. And so, as we saw during COVID, for some companies, COVID was a lucky thing, and for some companies, it was terrible. And who could have predicted that beforehand? Nobody. And so, I think a lot of the business is finding the right people, doing good things in big markets, and then getting really lucky. Yeah, definitely.
And is it matter for you more of the team, of the founders, or does the product and the idea matter more?
Um, all of the above. So at the earliest stages, when they're just starting, all you have is the team. So there, for me, if I know them and I've worked with them, or if they're people who I can really kind of get my head around, it is a team bet. It's like, they're working on a big problem, going into a big market, but we don't really know anything. For me, that's generally driven by how well I know them. If I know them really well, it's easy to invest at that stage. If I don't know them really well, usually what I'll do is I'll wait, watch, learn, listen. Um, at that stage, then they really start to get to what I think of as sort of the first hint of product market fit, which is they start to validate that they have a product that the consumers want. What I like to say is until you can cold call someone you don't know at 9 o'clock at night while they're putting their kids to bed, describe what you do in one sentence, and instead of them saying "fuck you," why are you calling me? They're like, "Oh, I want to talk to you tomorrow." You don't have anything yet, and so that beginning journey is to search for that value to the customers, and then figuring out how to build it, and how to get it in the market. And so I really get excited about that, which is looking for, okay, we got something exciting that customers want in a big market with a great team, and then it becomes really easy to get involved. And that's where I spend most of my time.
And so if these are first-time founders, how do you evaluate because like you can't evaluate whether they have any previous experience, any previous exits or something like that. So.
Yeah. So the biggest thing for first-time founders that I recommend is that ideas generally are a dime a dozen. Everybody has an idea. Everybody has what they think of as a really exciting idea. But what's actually really rare is validated ideas. So proving that the thing that they're building is something that customers want and it's something that they can build. So like, if you tell me, hey, I built a battery that goes 1,000 miles for your car, I'm like, great. If you could build it, like prove that you can build it, and then I think you'll be a trillionaire immediately. Um, you know, but oftentimes what they do is they come in with an idea, and then they can't prove that they can build it, and they can't prove that the customers want it. And so what I always say to them is like, go prove it. Prove that customers want that. Prove that you can build this, and then we can get to the next step, which is like, how to raise capital to support it, how to like start building in that direction. But until you get that validation, you really don't have anything. So for me, it's all about validation.
And as well, everybody used to go to California, to Silicon Valley to build their startups, and where is the place where you're based. Do you see any shift of the innovation? Do you see any other regions emerging? And is it really important to go to Silicon Valley to get your company to become a unicorn?
Yeah, it's still the center of sort of the network that is talented founders, talented engineers, talented product people, talented marketing people. Like the best people in the world for technology are in Silicon Valley. It's had its problems. San Francisco in particular has really struggled over the last couple of years. But like, if you want to build a world-class company, you need to spend time there. You don't have to be there. Like now with remote work, and you can hire the best people in the world from anywhere in the world. But you need to spend time there. And so what we've seen over the last couple of years is a lot of people left when COVID happened. San Francisco in particular, had really broken itself. And now a lot of people are coming back because the energy is so powerful. And when you're building a company, when you do find product market fit, when you find something that the customers want, suddenly what happens is the business, all the things that used to be hard, customers, revenue, traction, they become easy. All things that became easy, growing, scaling, becomes really hard. And so when you are in a place where all the smartest people are nearby, it's pretty easy to grab them when you're like, I have product market fit, now I need great marketing, now I need great sales, now I need great customer support, now I need, like, the people are there, you can scale really, really rapidly. And so like having your base there, when you find that, is super valuable. You don't have to be there, but it does help quite a bit.
And as well, do you invest into other regions too?
Sure, yeah.
Especially here in Middle East?
Yeah, so I invest all over the world. I have a company called Booksy in Warsaw, which is doing great stuff. A unicorn, awesome company, really exciting. I've got another company called Asana Salud in Mexico City, which does health tech, doing great things. A company called Learnerly, which is in London, which does sort of a platform for continuing education for enterprises. Zeotap is in Berlin. They do sort of a CDP, a customer data platform. So I'm always looking all over the world. I haven't invested yet in the Middle East, but I'm here. So hopefully I can find something exciting.
And how do you find your deal flow? Do you usually startups approach you themselves, or do you approach yourself some startups, find them on Twitter or something like that?
Almost everything is my friends. People I know send me stuff, and that filter of sort of like people who I know and trust, they really can make it a lot easier for me to spend my time, because the stuff I get from people I don't know, I mean, probably 100+ companies a day, and a lot of them aren't very good, and so it's like, it's hard to like go spend time and think about it when you're like most of the companies aren't very good. I look at it, but it's a challenge. A lot of the stuff is people I know.
And are there any particular industries you're interested in?
Yeah, I do B2B software. So I don't do a lot in consumer. I don't do any hard things. I don't do any crypto, no bio, no chips. Anything where you have to be like super smart in a particular area, like I'm probably not a good fit for that. But pretty general B2B software is where I spend all my time.
And any particular industries within B2B software?
No, it's pretty broad. Companies you would know, everything from HelloSign digital signatures, mParticle does a customer data platform, obviously branch metrics. OneSignal does push notifications. Booksy is a scheduling app for nail dressers and hair salons. Firefly is an AI tool when you have a Zoom meeting. So I'm in all sorts of random stuff in lots of different areas.
Yeah, now it's a big boom for AI, especially in California too. Like the majority of AI startups there. So do you invest as well into B2B AI software, or you just see your portfolio companies starting implementing AI more and more?
Yeah, so I invested the application layer with AI. So at the point that you can use AI to provide differentiated customer value is where I started to get excited. I don't do the foundational stuff. I don't do the sort of tools and that's a world that I'm not all that smart in. But the application layer, and yes, in the last couple of years, almost all of the interesting startups that I've seen and invested in have been AI companies. And if you're not basically putting a huge amount of your investment or all of your investment in AI when it comes to product, I think there's a good chance you're making a mistake. It's just like it's so powerful.
Don't you feel that it becomes some kind of overhyped and now just everybody puts they use AI, but they are not really?
Yeah, I mean, I think it's like everything. Like when you look at mobile, for instance, when mobile first came out, everyone like built a mobile app, but the difference between the people who really figured out what mobile was able to do that was just super powerful and differentiated. So like for instance, when my friend Travis started Uber, like it was probably one of the biggest ideas of all time. And it was like, how can we use the phone to create a remote control for the world where you can push a button and solve a problem? And what came out of that, a gigantic company.
So did you invest in Molly?
I wasn't an investor at that time, so no. He and I, it's funny. We were at a party, and we had this gigantic argument about whether or not it would work. And I was like, dude, I love you. Like, this is an amazing idea, but like the taxi lobby is gonna fuck you. And he was like, I'm a fighter. I will fight through them. And I was like, and we argued for hours about it. He was obviously right, and taught me a lot of lessons as an investor. But yeah, no, I wasn't an investor then. I wish I had been. That would be.
So do you have any other examples when you didn't invest and that company became quite successful or unicorn?
Oh, sure, all the time. Yeah, I was there when we used to play poker with the Dropbox founders and the Airbnb founders, like when they were literally Airbnb and Reddit and Dropbox and all those guys. We'd sit around and play poker for like, $20 buy-in. And yeah, the great thing about Silicon Valley is you get this proximity to smart people doing amazing things, and they come from all over the world, and it's such a sort of like, what's the right word here? It's such a fulcrum. There's so much leverage because of what the city provides that it really just sort of like levels people up really rapidly. And so the proximity to amazing founders doing amazing things is really special.
So what's the percentage rate of your successful and not successful investments?
Yeah, so I've been very lucky. Money was so free for so long that I invested in 80 companies, and I think I've only had 3 go out of business so far, which is pretty crazy. Normally, for early stage, you'd expect a lot more. I think we have 6 unicorns. I don't know. It depends on the current valuations. They've changed so rapidly these days. But yeah, no, it's so far so good. The next step is to hopefully go public with a couple companies. Across the portfolio, they generate about $1 billion in revenue now. So like, there's real scale there. Yeah, I've got my fingers crossed. See how it goes.
That's really nice ratio. And are any of your portfolio companies already been public or not yet?
No, we have not gone public with any directly. There's a number of them that I'm excited for. Mercury, the bank, they at some point should they be a very, very big company. Maybe they'll go public. Branch Metrics is a large company. Placer.ai, good company. They could go public. Yeah, I don't know. Fingers crossed.
And when is, in your opinion, is the right time for the company to go public?
Yeah, so the public markets are always tricky. Going public when you're small is really expensive. It's painful. It's a huge distraction. And so the later that you wait in the life cycle of the business, the more successful you'll be as a public company. That said, timing is tricky. You got to find the right window. The 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 markets have got to want what you sell. You have to have a good use for the capital. All the pieces have to come together. So I'm not one of those people who believes people should rush to go public, but I am a person that believes that if you can go public, you should. It's good for the company. It really helps scale.
And now, since you invest into B2B software, do you consider or have you considered investing into any blockchain enterprise companies?
I don't do anything in blockchain or crypto. That whole world is a world unto itself, and so I don't do anything there.
What's your general opinion about blockchain technology and crypto?
I've not yet seen a company using blockchain that for B2B applications where I'm like, it makes sense to do that versus just having a centralized database. I think there's some strong arguments for why you could build sort of a independent source of truth that doesn't reside in a centralized database. But I haven't seen any where I look at it and I'm like, oh my God, that's the future. Yeah, I could be wrong. I just don't spend a lot of time there. Like it's the sort of thing where like a bunch of really smart people who I know have developed a great expertise in that ecosystem, and that expertise, the delta between what they know and what I know is so big that I'm like, I don't even want to try to compete. It's like when you go to YC demo days, you go there and they present, and you look across the room and there's 1,000 other investors. You always have to ask yourself, am I the smartest person in the room about this company? And the answer for me is almost always no. Sometimes I am, if it's in ad tech or martech or data, I may be the smartest person in the room, but like usually no. And when it comes to crypto, I am absolutely not the smartest person in the room.
And you as well to invest in big funds and bring deals to them. So what's your advice for the startup founders how to approach like big funds like A6 and that and so on?
Yeah, I generally believe that like unless you already have a pre-existing relationship with them and you know them for a long time, the only thing that matters is like the traction and metrics of your company. So when you actually have got something that is really scaling, really growing, like there's real metrics. What you'll find is the people who know those firms, people like me, can open the doors very rapidly because like we can put our credibility on the line. We can go to one of our friends who's partners in one of those companies and be like, hey, this company is amazing. You should invest in this. You should take a hard look because if someone like me opens that door, then everyone owes me a big favor. If they invest, they owe me a favor. The founders owe me a big favor. And so we have an incentive to help open that door, but we also have an incentive not to do that unless it's real. And, I look at, hundreds of startups a day, maybe not a day, but certainly over 100 a day. And I know what looks good that Sequoia would invest or that Andreessen would invest in. And so as a result, I can really lend a lot of credibility to that. Otherwise, I wouldn't waste your time because they see so many deals and they have a very, very, very particular filter about what they're looking for. Yeah.
Okay, great. Thank you for sharing your thoughts and thank you for the interview.
Yeah, thanks for the time. Great to meet everybody.